Good morning, everybody. Hey, welcome to this Friday, the 6th of February. Looking forward to talking today after yesterday's major downturn. And we'll discuss that and more when Dave joins us here in just a few seconds. Remember, it's risk in your portfolio that makes these ups and downs really, really painful. Give us a call at 863-382-0037 to make sure you're on the right path to the retirement you always dreamed of. Hey, stay tuned. We got Dave coming up next.
5.7 Light FM. That's the Jefferson Starship there. They used to be the airplane, then they updated the Starship, don't you know? It's 8:41 now, 19 before 9.
Advisory services offered through Second Half Financial Partners, LLC, an SEC-registered investment advisor. The opinions voiced and information provided in this material are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual. To determine which investments are appropriate for you, please consult with a financial advisor. Second Half Financial Partners, LLC does not provide tax or legal advice. Please consult your tax or legal advisor regarding your particular situation.
And all that means it's time to check in on your money with the help of Philip Statler from Statler Financial Services in downtown Sebring, who's on the telephone even as we speak. Philip, good morning. How are you today?
Hey, good morning, Dave. I am better this morning than I was yesterday. Looking at the markets, they were, dismal, to say the least.
Let's call it a bloodbath because I don't have too better a term for it. The Dow ended up down 593 points. The S&P was down 84 points. That was a higher percentage than the Dow, though. NASDAQ almost took the title, down 364 points. That's 1.6%. But the Russell 2000, not to be outdone, was down 1.79%. It was a sell-off yesterday. I think the Russell has a lot of small software companies in it, which means it ended up getting tanked down with the software sell-off along with all the big high-flying tech firms as well. It was just not a good day. But then we turn around and we talk about how the investing and the indexes are kind of like the study of abnormal psychology. We had one firm, big one, saying, "Hey, the software sell-off should be over now," and it kind of changed everybody's mood, didn't it?
It definitely seemed to, Dave. I mean, we've got some green ink this morning, thankfully, which is good to have. Let's mention this real quick before we're talking about bloodbaths. Silver, off its high, right? It actually closed really close to 120. It's at 70 something now. It's down 61. I'm sorry, $61. It's down 30 something percent.
Something tells me I was a rocket scientist for selling the family silver a couple of weeks ago, huh?
But you take that, and it's about like crypto. The same time period, crypto's down about 30% too. So it's kind of tracking silver right now in terms of return.
Do you ever think that precious metals and crypto would be something that would track together? I mean, they're kind of sort of the opposite ends of the investment spectrum. One is something that's nice and hard, you put your hands on it, and the other is just something that nobody knows what the Sam Hill it is, and they're both tracking together at the same time. It's a weird time to be an investor, which is why we do this every day. Hey, we were talking before we went on the air about the larger picture on the job market. We're not going to get the official federal number because of that brief shutdown. We're not going to get that until next Wednesday. But putting together the pile of information we got, including the JOLTS report from yesterday morning, we've got a kind of employment market, but it's not a disaster. Job openings did miss expectations yesterday. They expected 7.25, got 6.5 million job openings. But then the quit rate, it's about 2%. Hiring rate actually improved by a little bit, and the Challenger Grain Christmas layoff data showed January being the worst month for layoff plans since 2009, but the weekly first-time jobless claims are holding relatively steady, meaning the ones that are getting laid off historically from a few months ago now are basically finding jobs where it's a lukewarm employment market, but it's in no way, manner, or form a disaster, I think might be the way I'd describe it, wouldn't you?
Definitely not a disaster, Dave, which is good, right? It means people are still working. It may not be the job they want. They may be working two jobs to keep up with inflation, but at least there's jobs to be had out there, which is still a good sign.
Absolutely. You'd mentioned the Goldman Sachs report about software, and it's kind of interesting. Everybody reacted to software because of artificial intelligence doing all of its work, and started selling off all the software-related stocks, like Chiclets earlier this week. What Goldman Sachs, you said, so they were kind of at the bottom?
That's what they say. They say between a couple of different things that they track, that they believe that the software route is hit a bottom. So we shall see if that's true or not over the next couple of days and weeks.
And when one authority says it, everybody follows like a bunch of sheep at times, like they did when somebody said that Bitcoin, that the artificial intelligence servers were going to provide everything the software did. I mean, they can draw fancy pictures of us, but near as I can figure, I so far think ChatGPT for the individual is more of a toy. I'm still going to buy software. Pizza Hut's closing 250 stores, and the parent company is talking about selling it off. Boy, talk about an American institution possibly going away.
Yeah, that's I hadn't seen that, but that's Pizza Hut's been around, I won't say quite as long as I can remember, but definitely my high school days anyway.
Absolutely. I remember from my high school days, there was one right around the corner from my high school that had an all-you-can-eat buffet, so we all took open campus lunch and made sure they lost money on the all-you-can-eat buffet. They go back a lot of years. Another one I asked you about before we went on the air, just going through my winners and losers list, Stellantis, the people that make Chrysler, they were down 25% yesterday. If you got Stellantis in your portfolio, you're saying, holy crud. I mean, they've been getting beat up all year by comparison, but they hit an annual low yesterday. You said they had a big write-off, huh?
They did. They're restructuring, miscalculated their EV write-off, electronic vehicles, that they're doing away with or scaling back on. So they're going to take a $26 billion charge and restructuring. So that's what's really hitting Stellantis this morning.
And it'll always do wonders for your stock price if you say, oops, I was wrong, and give them a new number, doesn't it?
Especially if that number is going the wrong direction.
Yeah, that'll do it to you. Earnings season, we're really in the meat of it, and we're pretty much, it's a who's who almost every doggone day, and we got a slew of them out there. The big kahuna that came out that probably is going to be on everybody's tongue kind of follows the same pattern that Google and Alphabet did earlier in the week. Spend more money, do well, but because you're spending more money, they sell you like Chiclets. What was Amazon's report doing anyway?
Amazon did pretty well. They beat on revenue. However, they missed by 2 cents a share, which doesn't sound a lot, but they have a lot of shares out there, right? So that 2 cents a share, they came in at $1.95. So that was kind of a strike against them there. They missed that. And then like Google, they came out with their projections for lower first quarter profits because of higher capital expenditures on AI, something like $200 million more, something like that. I saw a big number, to say the least. And so that's getting them a little newsworthy this morning, but they're down like 8 1/3%.
Youch.
Yeah.
And, we're looking at, they're missing their profit by a nickel. You and I both remember it was a few years ago when you and I wanted to send them a bouquet of flowers when Amazon finally went profitable for the first time. Remember that?
That's right. So it's been a lot. It seems like a long time since then.
Yeah, it wasn't very many years ago, and all of a sudden it's one of the big kahunas that we watch, kind of like we watch Walmart. Other indications we got from reporting companies out there?
So we do. Let me click the right little thingy here. So we got Amazon. That was a big deal. Reddit reported. They've been getting beat up pretty bad the last couple months, but they had a great fourth quarter. They came in. Come on, right number. They came in at $1.24 versus 94 cents a share. So 30 cents more than expected on earnings. Good number there. Revenue, about 60 million more than expected, came in at 726 million. So they really had some good numbers, and they project the same thing kind of this next quarter. So Reddit's getting a nice little bump this morning. They're up about 6.5%.
I had always almost written Reddit off as being over in the face of X and Facebook and all the other hotter new social media platforms. Maybe all the travails X has gone through under Elon Musk's ownership is saving some of the secondary social platforms.
But maybe the other thing that's helping them is they announced they're going to buy back $1 billion worth of their shares.
Crud.
Yeah.
Well, good news for them. What else have we got?
I'm looking. We got Molina Health. They lost $2.75 per share. And so they took a pretty big plunge today. Down, my initial report said down 28%. Now I got them down 32%.
Wow.
Yeah.
It's a bloodbath out there. Do you have any good news this morning?
That's really it. That's all I've got this morning, Dave.
All righty. In that case, we'll reset the table. It was a bloodbath yesterday for all the major indexes. I should mention that Bitcoin is recovering this morning. It was down around 66,000 yesterday. It's up to 67,349 in my delayed quotes this morning. So if you bought it at $20, you're still a happy camper. But boy, if you bought it at 120,000, you're not very happy. Elsewhere, where are we going this morning, 45 minutes early?
Well, stock index anyway, we got green ink this morning, Dave. The Dow's up 0.5%. S&P 500's up 0.5%. The NASDAQ 100's up almost 0.6%. And Russell 2000 is making a big jump this morning, recovering nicely, up 1.4%. So that's pretty good. Silver's down another 1.75% to $75.32 an ounce. Gold has managed to jump up 1.25 right now to $49.50 an ounce, and then crude oil is down 0.7, about $1 less than yesterday. I think $62.81 a barrel.
Cool. Glad to see it go the right direction for a change. The overseas market, Asian Rim, was unhappy with us talking software and selling off that stuff. 6 a.m. close this morning. Virtually everything was in the red, including the mainland Chinese indexes, which were down by about 1/3%. Europe, on the other hand, relatively happy this morning. Let's see, Italy is down by a little. Everybody else is in green ink. The average European index up by about 0.5% halfway through their trading day. Getting my retirement together takes a pair of eyes that can look at where the hidden risks and the hidden charges are in my retirement plan. How do I get a hold of you to find out where all that stuff is anyway?
Dave, here's the deal. You got to know what the markets are doing. They can give us a call at 863-382-0037 to schedule their core retirement design. We're going to look to make sure that they're on the right path. Making sure that they've got everything they need the way it needs to be, looking forward towards their retirement. And then catch us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk, 7:30 a.m. and 95.3 FM.
And at newstalk730am.com, where we stream everything as well. You have a marvelous weekend, my friend. We'll catch you next week.
All right, you too, man.
Thank you. It's 105.7 Light FM and Statler Financial Services, Philip Statler.
Folks, thank you for joining us today. Hope you had a great week. Have a good weekend, and I will talk to you next week. Have a great one. Bye now.